My name is Dan Dorval, and I'm President and CEO of Dorval and Cherney Financial Advisors. I am an independent certified financial planner and author of my book, Financial Success for the Rest of Us, Reality-Based Financial Planning for Mainstream America.
Hi, my name is Leah Woodley. I'm an associate financial advisor with Dorval and Cherney Financial Advisors. Our conversations discuss what it means to do quality of life planning in all areas of your life. Dan, today I want to talk about chapter 6 of your book, which is kind of like an introduction to investment. There's themes about goal-focused investing, avoiding financial distractions, managing emotions, and the role of a financial advisor. So the first thing I want to touch on is you say that investing isn't really about picking the best investment. If that's true, what should people actually be focusing on before they invest a dollar?
Yeah, a lot of times people are sold on the idea that there's this perfect investment. There's the best investment that's out there, whether that's crypto, or it might be gold, or a certain stock or something like that. They think in terms of, I'm going to use this investment to get rich. And that's how they measure the attractiveness of those investments. And when we're talking about investments, we just look at them as being tools to help accomplish goals. They're not really right or wrong. They're not really good or bad. We don't pretend to know which stock is going to be the best performing stock over the next 1 year or 5 years or 10 years. What we do know is that stocks are a great tool for growing money over long periods of time. It's what they're for. So if you think in terms of your goals, if you're a younger person and you're talking about a retirement account like a 401k, and you're maybe decades away from retirement, yeah, you should be using 100% stocks. It's the right tool for growing money over that period of time. And instead of getting caught up in which stocks, you can actually invest in broad-based index funds, or you could pick a diversified portfolio of stocks. And now you're not worried about, oh, did I pick the right one? And so, as you start to think about, maybe I'm saving for a house and now I need that down payment in a year or 2 years, some shorter period of time. Now, stocks are not a great tool for that priority because they could go down significantly over a shorter period of time. There have been several occasions where you could have 2 years in a row that are negative right when you need the money for something that's important to you. So, aligning the investments with what the money is for is actually the most important thing when we talk about investments from a general perspective.
Yes, keep your eyes on the prize, and that should be your quality of life goals. Now, one of the topics that you presented in this book is about people looking at their home as an investment. And can you explain why you think that is not the right thing to do and why that topic is so controversial?
Yeah, this is probably something that you would see more on social media as being a controversial type of opinion, because so many people have been taught that their house is an investment. And I look at it and I say, well, no, your house is a place to live. And that house should be the place that brings you quality of life and what you're trying to accomplish. So if you don't really know where you're going to be, and you might move from city to city, or maybe you've got a job where any upward mobility requires you to move, renting might make more sense than buying a house.
Mm.
And if you say, well, no, I'm married, I'm settling down, we're having kids, we want to raise our children in this home and have stability, and we're going to be here for a while, well, then buying a house might make a lot of sense. But you don't think in terms of the house as being an investment. It's actually a cost. So when you think about all of the taxes, all of the insurance, the maintenance, you build a deck, you do landscaping, and all of those things might make your home a very special place to you. But it is very rare that putting in things like that will result in an improved sale price. It might help you sell your house faster, but it won't necessarily help you sell it for more. So if I talk about making an investment in my home, that should be for your own quality of life and not so much, hey, I'm going to be able to sell this for more money.
Right. Especially, you never know how markets are going to go or anything. So, yeah, it's not an investment for sure. Now, you argue that the biggest threats to investment success aren't the markets, they're the media and our own emotions. Now, we talk about the noise from the media a lot. Let's talk about the emotional aspect. What type of emotional threats do you see when it comes to people looking at investments in the market?
Well, we're bombarded, excuse me, we're bombarded with information endlessly, whether it's online, whether it's friends, family, coworkers, whatever it happens to be. We talk about this noise all the time. And the best way to get attention is to create an emotional reaction. So, if I want to draw your attention to investments, for example, I could use a headline to scare you, like the market is poised for a serious decline, or, the devastating drop today if the market happened to go down over a 1 year or a 1 day period of time. And so that gets your attention. And then you start to go, oh, well, maybe I'm getting close to retirement. I don't really want to see a significant decline. The headlines are telling me that the market is collapsing or it's some sort of extreme language. And then I decide, well, maybe I need to get out. And it takes your focus from things you're actually trying to accomplish to things completely out of your control and probably exaggerated, and it doesn't even make sense if you really were to take the time to think about it. What happens is, though, most of us are in a vulnerable position when we're talking about something like investments because we don't really know. That's not our thing. I mean, we help nurses all day, every day, and they tell us, I'm not interested in investments. I don't want to watch the market, but they still see the headlines. And it's the headlines that draw their attention and create maybe a fear-based response, or you can have people get drawn to something like some amazing performance numbers that happened in the past, and all of a sudden they go, wow, that would be great. Well, that happened in the past. We don't know if that's going to continue to be the case going forward. So aligning your investments with your goals keeps you from getting drawn into these emotional reactions, and in most cases is going to be a far more productive way of thinking about your investments.
Yes, definitely. That's a recurring theme. Just keep your eyes on your goals and not what else is going on around you. Now, you share a very personal story about trying to time the market and losing money despite the fact that you were right. What lessons do you hope viewers take and readers take away from that experience when they read the story about your day trading?
So, this is very common for young people in general. I would read about the markets, I would look at what was going on, and it's easy to get sucked into the idea that, well, why can't you predict these things? Like there's some logic to a lot of this stuff.
Mhm.
And at the time, it was a boom in the internet. And so this was the 90s, late 90s, markets were going up, technology stocks were booming. Kind of sounds familiar to today's world.
Yes.
And my first investment that I made was a technology stock that was it in today's world, you wouldn't know what it is because you wouldn't have heard of it. It no longer exists. But I doubled my money in a very short period of time. And I thought, well, this is pretty easy. And so then, with the tech market getting very, very elevated, I decided I was going to get a little more creative and I shorted a stock. And for
Mhm.
most of our viewers, they're not going to know what shorting a stock means,
Mhm.
but it's basically selling a stock that you don't own. And then the idea is it'll go down in price and then you basically buy it back and you make money in that process. Well, you have unlimited losses when you short a stock. It's not limited by the value of the company itself. And so this stock kept going up, even though I was betting that it would go down. And over a short period of time, it just went up faster and faster and faster. And this is where I got sucked into something where it's like, okay, my losses started to mount. I looked at it and said, I think I need to, cut this loose. and just end it. And so I ended up losing a significant amount of money at a time where it was very meaningful money for us. And yet it was a great learning opportunity because like a year later, that company had gone from way up here down to almost being gone. And if I had timed the whole thing differently, I could have made an enormous amount of money. And then I would have thought I was a genius because I would have made a bunch of money. And instead,
Yeah.
my timing was off by not that much, but it was off. And so when that happens, now all of a sudden I learned a really good lesson. And that's what I want people to take away from this is even if you're thinking about something very logically reasonable, whatever, the markets don't have to be logical. They can
Mhm.
keep going up at a time where maybe their valuations are historically high. Maybe it's not a reasonable thing for people to be buying certain stocks. And yet at the same time, they keep doing it. People who participate
Mhm.
in the market aren't always reasonable. So in this case, again, focusing your investments on what you're trying to accomplish in a longer term perspective is usually the best approach for the vast majority of people.
Yes, it is. Now, you describe a financial advisor as more of a behavioral coach than an investment picker. Why do you believe that's where advisors provide the greatest value today, especially now that anyone can access financial information online?
Yeah, it's a great question because for the longest time, the financial services world was designed to basically sell you stuff.
Mhm.
And so I could show you an investment story. A lot of times they were presented as stories, and it might elicit an emotional response. And then you go, wow, that's a great story. And you would
Mhm.
buy an investment. Well, in today's world, you can access markets without an advisor very easily, and you can use AI to assemble a portfolio. Like that's the easiest thing in the world. So, thinking in terms of it's these behavioral decisions like timing the market, maybe getting sucked into a story of a speculative type of investment. I just had an email from a client a couple days ago where this person reached out and it was an oil and gas participation program. And the whole email was designed around getting you like sucked into this is going to be an amazing investment. And it's going to have tax advantages. People love to hear about tax advantages. You're going to make like 30% per year. And I looked at it and he goes, what do you think? And I'm like, if it sounds too good to be true, it probably is. We talk
Yeah.
about the Tin Stoffel theory. There is no such thing as a free lunch. And so we should be skeptical of those stories. It doesn't mean that they don't, like ever work. They certainly do work sometimes, and that's part of the reason why we find them attractive as stories. But when you think about a good advisor, I responded to that person and I said, here's why you're doing what you're doing, reminded them of
Mhm.
the goals that they have. You don't need to get sucked into this type of a thing. If it
Mhm.
goes poorly, it could adversely impact your ability to meet your goals. And if it goes well, it's not going to have a material impact on your quality of life going forward. And he took that and said, okay, that's exactly what I was looking for, was just a reminder that these things are not things that I should be doing.
Yeah, that shift in focus that we can offer to clients is definitely important. I think sometimes clients get caught up in wanting more and thinking that they need more when that may just not be the case. Well, is there anything else that you would like to add before we close?
I think that whole fear of missing out is also a powerful motivator. We oftentimes hear stories from other people or social media, and it shows somebody maybe made a whole bunch of money on NVIDIA or Apple or some other stock, and we feel like we missed out. So then when we hear a story about the next big thing that's out there, we go, oh, well, I missed out over here. I have a
Mm.
fear of missing out again over here. And I don't want to do that. I want to be the smart person who does that ahead of time. And then what we don't hear are all the failures. For every
Mhm.
NVIDIA that's out there as a stock that did incredibly well, there are also thousands of companies that completely failed and went bankrupt.
Yes,
So it's that fear of missing out that's really prevalent today.
I agree. Well, thank you so much for talking about chapter 6 of your book. If anyone wants to purchase it, it is available on Amazon, Financial Success for the Rest of Us by Daniel J. Dorval. And until next time, have a great one.
Thanks, Leah.
Thank you.